Ladies and gentlemen, good day and welcome to the Q1 FY23 earnings conference call of Granules India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ashish Chowatia of Orient Capital. Thank you, and over to you, sir.
Thank you, Kathy. Good morning, everyone. I am Ashish Chowatia from Orient Capital, and we are Investor Relations Advisor to the company. I hope that all of you and your families are safe and healthy. On behalf of Granules India Limited, I extend a very warm welcome to all participants on Q1 FY23 financial results discussion call. Today on the call, I am joined by Dr. Krishna Prasad Sir, CMD, Dr. KVS Ram Rao Sir, Joint MD and CEO, Ms. Priyanka Ma'am, Executive Director, GPI, and Mr. Sandeep Sir, Chief Financial Officer. I hope everyone had an opportunity to go through our investor deck and press release that we have uploaded yesterday on exchanges and on our company's website. I would like to give a short disclaimer before we start this call. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I hand over the call to CMD Sir for his opening remarks. Over to you, sir.
Thank you, Ashish. A very good morning to all of you, ladies and gentlemen, and thank you very much for joining us today. I'm happy to inform you that we had a decent performance in Q1 and see positivity going forward. Our revenues for the quarter were 1,020 crores with EBITDA of 212 crores and PAT at 128 crores. Compared to Q1 of the previous fiscal year, we had a 20% growth in revenue, 10% growth in gross margin, 5% growth in EBITDA, and 6% growth in PAT. We had recorded a sequential growth in terms of absolute values in gross margin, EBITDA, and PAT for the last 4 quarters. Our gross margin percentage, EBITDA margin, and PAT as percentage of sales have also grown sequentially for the last 3 quarters. This performance was despite the pricing and logistics pressures we continue to face in the US. However, on the positive side, the prices of all our input materials and international freight rates have stabilized, and we see a slow downward trend. Though we do not see the prices returning to pre-COVID levels, we are confident that the downward trend will continue for a while. While we had faced challenges around the availability of PAP, the key raw material for paracetamol during the past few years, the situation had now improved with the largest manufacturer in China resuming production and a few new manufacturers coming up in India. We now have adequate supply of PAP for manufacturing paracetamol from the month of June 22, and the plant had started running with full capacity. This stability in the PAP supplies is expected to continue in future. With the environment around us improving, we are confident of improving our performance quarter on quarter. Due to the supply chain disruptions during the past, our inventory and working capital had increased considerably. Now our focus had shifted to free cash generation along with profitability. As you can see from our investor presentation, our operational cash flow had increased to 180 crores as compared to 75 crores in the last quarter. Our free cash after a capex expenditure of 82 crores was 98 crores. And we expect this to improve going forward due to various measures that are in process. During the quarter, we had filed 5 ANDAs and 2 US DMFs. We have received 1 US, 1 EU, and 1 Canadian approvals. We have received an approval from the Department of Pharmaceuticals under PLI scheme to manufacture DCDA, which is the key starting material for metformin. Our European business had seen good traction and contributed 22.5% to our Q1 revenue. The growth for Europe in upcoming years will be driven majorly by partnership business model, as this offers value add to our partners and strengthens Granules' footprint across Europe. The board of directors have approved a buyback at rupees 400 per share at a total value of rupees 250 crores. After the earmarked amount of 300 crores for capex during the year, we are confident of ending this year with a much improved cash flow and lower net debt position compared to FY22, and thought it is prudent to reward our shareholders. While the current business model continues to grow, we are all excited about our journey toward Granules 2.0. And I request Dr. Ramarao, JMD and CEO, to take you through this journey.
Thank you, Mr. Chairman. Hello, everyone. As a part of Granules' long-term strategy, science, technology, and innovation has been identified as an important strategic lever and key to our success by enabling us to offer differentiation and global cost leadership position in the market. Our strategy aims at creating technology platforms in chemistry and biotransformation through partnerships and internal innovations. We continue to build the organization aligned to that transformation. We are doubling down our R&D, technology, and sustainability, building strong R&D capability for API and formulation, thereby enhancing the scale and quality of our pipeline. Towards this goal, we have recently inaugurated a new state-of-the-art integrated product research and development center at Genome Valley, Hyderabad. The R&D setup in 20,000 square feet will function with an initial strength of more than 150 scientists across both the divisions of API and formulation. The new facility brings API R&D and formulation R&D teams together under one umbrella. This will enable seamless coordination between the teams, leading to agile product development processes and collaborative problem solving. The common analytical resources will help us bring the efficiency. Our vision is to develop integrated R&D products, and with this vertical integration, we see Granules getting transformed into a technology and R&D driven organization. The company has acquired a small biotech company to bring fermentation and biotransformation capabilities as a part of our strategy, and at a lab in the pilot scale that we can leverage for enzyme-led projects of biotransformation with our partners. On the business development front, we are currently working with several customers to provide CMO services for our oncology block. We are evaluating opportunities for offering product, process, and related services to the customer in the area of oncology. With this, I hand over to Sandeep for taking us through a detailed financial performance.
Thank you, sir. Let me now take you through the top financial performance for the quarter. Revenue. The first quarter revenue was 1020 crores as compared to 850 crores in Q1 of FY22, a growth of 20%. This growth is mainly caused by increase in the business across all regions and by our new launches in the US region. Revenue share of non-core molecules stood at 18%, which is a percentage high than the last year, which emphasizes our long-term strategy. The sales breakup as per the business verticals and regions are presented in our investors presentation, which is available on the website. Gross margin. Our gross margin as a percentage for Q1 contracted by 4.6% year-on-year, mainly due to pricing pressure in the US and also increase in the cost of key starting materials, solvents and logistics. EBITDA and EBITDA margin. EBITDA for the quarter was 212 crores as compared to 201 crores in the previous year. Same quarter as increase of 5% over the previous year is mainly on account of increase in business across various geographies. Our R&D spend for the quarter was 32 crores as compared to 27 crores in the same quarter of the previous year. We have taken a new premises for our R&D setup in Genome Valley and have moved into that new premises. With an increased focus in the R&D under Granules 2.0 strategy, our efforts around R&D would increase for sure. We have also just concluded purchase of certain assets of a small biotech company, which would increase our focus on fermentation and allied technologies. The purchase would increase our research capabilities around our technologies to the next notch. Net debt. Our net debt was 613 crores as compared to 697 crores a quarter ago, which is a reduction of 2%. Mainly, the reduction is on account of the short-term debt. Cash to cash cycle. Our cash to cash cycle was at 144 days as compared to 138 days in the previous quarter. The increase of 6 days is mainly attributed to the planned inventory increase, which was required for new launches. Also, restatement of trade receivable has resulted in certain increase in the debtors also. Operating cash flow. Operational cash flow for the quarter was 181 crores as compared to 132 crores in the previous quarter. Higher operating profits and focus on working capital management contributed to the higher operating cash flow in the current year. CapEx spent during the quarter was at 833 crores and the free cash flow that we generated was at 98 crores. Our endeavor for the whole of the balance year, quarter by quarter, will be to make sure that we generate more cash and bring the debt situation down. With this, I will open the floor for a question.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Krish Mehta from Anam Holdings. Please go ahead.
Hi, thank you for taking my questions. I just had two questions. One was on paracetamol. If you could provide an update on the pricing and more on the end user pricing in terms of customers and how you see this trend actually going forward.
First of all, let me explain that our customers are all the top brands in the world. And also, we also sell not only APIs and PFIs to the top brands, we also sell our tablets also to these people, and we also have our GCH, Granules Consumer Health in the US, through which we sell different types of paracetamol tablets to all the chain stores like Walmart and Target and other people. Prices, I don't think we can share with you, but overall I can say the selling prices are likely to come down slowly, along with reduction in costs, mainly due to the possible reduction in price of PAP. There will be a downward trend based on the price of PAP. However, there will always be a lag. It will not be in the same quarter. So we see that we'll be able to maintain our margins on all paracetamol products.
Okay, thank you. And my next question was on peptides. If you could provide like a similar, guidance or outlook on how you see the pricing evolving going forward.
On peptides, I think it's good that Dr. Ramarao answers this question.
Sorry, can you just elaborate which peptides you are talking about?
I was asking more from a broader perspective in terms of the raw materials and input prices.
Oh, I thought it was peptides. I was wondering on raw material pricing. Yeah, raw material pricing, at least the increase has stopped and they have stabilized, and we see some slow downward trend. And going forward, if nothing else happens or unexpected happens in the world, we definitely see prices coming down quarter on quarter, and overall there will be an improvement. And availability is no problem right now.
Okay, thank you so much.
Thank you. Reminder to all the participants, to ask a question, you may please press star and one on your touchtone telephone. The next question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead. Yogesh Tiwari, your line is unmuted. Please go ahead with your question.
Hello. Am I clear now?
Yes.
Yeah. So thanks for taking my question. One question on DCDA. If you can share some details regarding what would be the capacity for the DCDA and how will it contribute to the financials? So what would be the cost savings and what is the requirement per unit of metformin? So if you can share some details on it and the timelines basically.
The cost, okay, let me start with capacity. We have the PLI sanction for 8,000 tons per annum, and we will start production at that level. And based on the overall situation in the international market, we will possibly double that production going forward. And pricing and the outlook with the imports coming in from China, we definitely believe we have a slightly better differentiated technology, unlike what the Chinese use. And we think we will be slightly cost competitive. But the main thing here is supply security rather than cost. Definitely there will be a little advantage which will add to the margins. And consumption coefficients, I think that's what you have asked. Yeah, it's less than 1:1, much less than 1:1.
So it is around 0.6, some back of the envelope.
Let's not go into those details. I don't think it's the right forum to talk about that. I'm sure by the way you're talking, I'm sure you know the answer.
Sure, sir. And what would be like the contribution to the financials? What would be the savings like if any quantification can be done on those slides?
Sorry?
What would be the quantification on the financials? What would be the savings if on the cost basically because of this?
It will be quite decent, that's all I can say. And definitely possibly about more than 10 crores a year, but it will be quite decent. We will not be able to put a number today because the Chinese import prices also will keep changing. They may drop the prices or they may maintain the prices. It's a little uncertain, but overall there will be an improvement.
And lastly, sir, what would be the timeline like? When can we expect this and what would be the capex involved in this?
Capex would be possibly around 100 crores. The pilot studies are almost getting completed now. And after that, we'll be able to put an exact number. So I can say around 100 crores and timelines could be 2 years from today, less than 2 years from today.
Thank you, sir. That's all from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So just extending on this capex question, so this will be the part of our 300 crore capex for 23, right?
Yes, it will be part of that, yeah.
Okay, great. Secondly, sir, on the non-core business, it has been largely stable for 3 quarters, and we have good number of ANDAs which are already approved. So if you could throw some color on that aspect. When do we see the non-core business picking up?
It is picking up slowly, Tushar. You have seen that it's just a 1% increase, but it's picking up. But what is also happening is on launches, you see that there will be a few pricing pressures that are happening. So, but going forward, we are working on cost optimization of all these products. And as you keep producing, the costs can be optimized. So we will see a better market share as we go by. So I cannot put any number on the table today, but definitely over the next 4 quarters, we'll see a very positive improvement.
Got it. And if you could just elaborate on this biotech asset in terms of the thought process and how do we see this over the next 4 to 5 years?
Okay, I think this is a question for Dr. Ramarao. He'll answer.
Yeah. The way we are looking at, and as I told in my previous calls and the current call, one of the biggest focuses will be on the biotransformation and the enzymes. And we have to build this basic capability of enzyme characterization and then the enzyme scale up. And that is where I think the asset that we have purchased will help us to get the competency and the capability into the organization. So as a part of our strategy, I think this is a good synergy in terms of looking at products with biotransformation and chemistry innovation, and it is exactly in line with what we have been speaking about earlier.
So how much do you intend to invest, maybe like over next 12 months in this segment?
Yes, in this segment, there are two types of investment, and we are working out on that. One is definitely the entire laboratory, pilot scale and all, and the second one is the fermentation which is required to build. Right now we are working on it, but definitely it will be north of 75 crores.
Overall put together, right?
Biofermentation.
And out of that, how much you would have spent already on this?
A little over 20.
And again, this would be also part of your overall capex guidance of 300 crores?
Yes.
All right, so thanks. That's it from my side. Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Poojan Shah from Congruence Advisors. Please go ahead.
Hello, sir. Am I audible?
Yeah, you are audible, Shah.
Sir, I just wanted to ask from the previous only. So, on a broader picture, are we seeing the demand coming up for fermentation because is China been facing some issue related to pollution or something? And how will be the demand wrapping up for the fermentation process in India on a broader picture?
I would not like to comment on the broader picture, but the kind of strategy that we chose on the fermentation, I think there will be a definite need for organizations to build their own capability because this is not available. And even if it is available, only in the form of the end product. So Granules looks at this as a strategic area of focus on the fermentation and its impact on global cost leadership on the molecules that we are looking at, rather than looking at this as a broader fermentation strategy.
Okay, sir. My second question would be on the EBITDA margin, as we have seen that our EBITDA margin remains around 21 odd%. So are we seeing the same trajectory going forward, or like we are seeing any volume growth and that would be contributing to EBITDA margin? Like we are seeing the price erosion, but are we seeing any volume growth over there?
Yes, we do see some growth, and we are also fairly confident that the EBITDA margin will be creeping up quarter on quarter. They may not be, we may not go to 30% like we did 2 years ago, but definitely the margin will creep up. And there will be an improvement quarter on quarter.
Okay, sir. And my last question would be on a, you can say on a historical basis, like are we seeing a volume trajectory growth as US been like now has been destocking and been stabilizing market, and we have been seeing a good traction in coming quarters. Are we seeing a volume growth of 5 to 6% or like less than it would be?
There will definitely be a volume growth led by different geographies. US, there is a challenge, but Europe also, we are launching a few products in Europe. Overall, we will see a volume growth.
Oh, okay, sir. That was my side. Thank you.
Thank you. Reminder to all the participants, to ask a question, you may press star and 1 on your touchtone telephone. The next question is from the line of Sri Shankar from NCRED. Please go ahead.
Go ahead, Mr. Shankar.
Okay, the current participant is moved out of the queue. We'd like to remind the participants to ask questions. Please press star and one on your touchtone telephone. The next question is from the line of Ashish Kabra, an initial investor. Please go ahead. Ashish Kabra, your line is unmuted. Please go ahead with your question.
Good morning, sir. Hello.
Good morning, Ashish.
Sir, regarding the buyback, just wanted to know that will the promoters will also be participating in it, or will it be only for the non-promoters?
Yeah, promoters also are going to participate. The option is for the promoters to participate. It's a decision of the promoters that will we have to wait and see. But overall, I'll say promoters will be participating.
And sir, can you just give like a roadmap for like FY24 or 25 regarding our revenue growth? Can we be around 15 to 20% like year on year?
You have seen our past record. We have been growing at a CAGR of 20%, and I don't see any issue in continuing that growth. But the most important thing today, Ashish, is more than revenue growth and profit growth. We are focusing on cash. And if you have seen what has happened in this quarter, last quarter, we had a positive cash of 95 crores after our capex. And we see this focus on cash yielding better results in the coming quarters, and we definitely see a cash build-up as we go by. So while revenues and profits grow at a certain rate, but we see cash growing up in a little higher growth rate.
Yes, sir. And one follow-up on this cash one, since our cash is also increasing, sir, can we see any future M&A from Granules, like not just for the next 2 quarters, but like for 1-2 years? Can we see some significant M&A activity?
Definitely, if there's a good opportunity that comes along with there's synergy with our business and which will fit into our overall plans of Granules 2.0, we will be very, very get into that. But as of today, we are concentrating on all organic growth. And we don't want to do an M&A just for the sake of M&A. But if something comes along, we definitely would like to do that. And also, I'd like to assure you, cash may not be a big issue if you have to do some M&As.
Thank you. Thank you so much, sir. Thank you.
Thank you. Reminder to all the participants to ask a question. You may please press star and one. The next question is from the line of Harith Ahmed from Spark Capital. Please go ahead.
Good morning. Thanks for the opportunity. So my first question is on the MUPS facility. Can you give an update on the current status of this facility and the capex that we spent here? Also, some color on the number of filings and the timelines for commencement of commercial supplies.
The first one on the MUPS facility, I think we have already commercialized a couple of products and the revenue started in from the MUPS products. And I think this is exactly in line with our capital expenditure proposals that we have started on the MUPS. Regarding the approvals, I think we have a few products lined up for different, and they are at different stages of approval. And we hope to see that the regulatory review and other things happen quickly, and we should be in a position to see the launches of these products.
All right. On the new BCDA capacity under the PLI scheme, so how much of I missed the capacity that you mentioned earlier, and how much of this will be for our captive requirements, and how much of this will be for external supplies?
Ashish, Aditya, I think we did not get your question, but maybe. Sorry. Sorry. Okay.
On the
capacity utilization is more than 50%, and we are already having an asset turn of one time on the investment today.
I'm talking about the DCDA facility that's coming up under the PLI scheme. What is the capacity that you mentioned a figure previously? I missed that. And how much of this will be used for our own requirement versus supplying externally?
I got it. Today, the 8,000 tons capacity will be enough for our own internal requirements. And if we increase the capacity, maybe we'll offer the product outside.
Understood. Thank you very much.
Thank you.
Thank you. The next question is from the line of Sri Shankar from InCred. Please go ahead.
Sorry, earlier when I asked the question, my line got disconnected, so I couldn't hear the answer. I have got a couple of more questions. Earlier you had spoken about, I think a year back or so, your 3-year capex program of around 1,000 crores. Where do we stand right now under all these turmoil, changes, etc. that we have seen? You have given the number for FY23. What is the expectations over the next 36 months?
Last year, we said it's going to be 1,000 crores. We spent 400 crores last year, and we said 1,000 crores over 3 years. So there's still 600 crores to go. And the first quarter, we spent about 84 crores or 82 crores. And I think we will be doing the 600 crores in end of FY24.
Okay. The question that I asked earlier was, you had mentioned about a steep increase in the freight charges, apart from the raw material increases, etc., price increases, which had resulted in margin pressures over the last few quarters. Now, to what extent is the correction that we have seen in raw material prices? I'm not asking for the exact number, and the freight charges. And do you think the price pressure for the selling price pressure that you may see going forward will more than the correction in these freight charges as well as raw material charges?
The freight charges have stabilized and have seen a slight downward trend. It's not gone down drastically, but a slight trend. But the good news is it has at least stopped increasing. And all the raw materials, prices are coming down slowly, and we see about, a few percentage points every quarter. We cannot anticipate anything, but definitely there's a downward trend. And the margins should definitely improve a bit, while the price of raw materials are the same for competition. So there will be a competitive approach to the customer, but definitely I see margins slightly improving.
Okay, the final question is for Sandeep. Sandeep, why, in your remarks, you did mention about your roughly 2% reduction in borrowings or something. I couldn't really catch that. But when I look at the net debt probably has come down to 0.72 or something from 1. So if you can also give in that investor presentation your balance sheet, you're not required to give it every quarter, but if you can give it in the presentation, it will be great.
Okay, I'll look into the suggestion very positively and definitely will provide some of the extracts of the balance sheet if that makes better sense. No problem.
Thank you very much. And all the best.
Thank you.
Thank you. The next question is from the line of Puneet Mittal from Global Core Capital HK Limited. Please go ahead.
Hi, good morning. Thank you for the opportunity. Just one question. You have highlighted that you will focus more on cash flow and free cash flow. From your presentation, if you look at the last 6 years, though the revenue has increased, the free cash flow, cumulative free cash flow is negative 200 crores. And even though your profits have been about 1,800 crores. Plus your cash conversion cycle has kind of deteriorated or at the same level as March 2017. So can you give some more color on when you say you'll focus on cash conversion or free cash flows going forward? If you can give some numbers also, how much cash flows are you targeting for the next 2-3 years, or what is the optimal conversion cycle that you're looking at? Thank you so much.
So I take it. So you are right that our focus was always to get into a situation where we balance between the debt and the cash that we are generating. And the debt decision was always backed up by the competitive rate that we were able to achieve. If you see our interest cost, it was always under control. Having said that, now the entire world is seeing upward trend in the interest rate. So therefore, the conservation of cash is becoming more important, and we are picking up as one of our strategy for this year onward. So therefore, the endeavor that will be there is to make sure that we are utilizing the debt in a very, very judicious way, and we will keep on reducing our long-term debt year by year, and there will be an endeavor to generate enough cash by various inventory controlling measures. Then some of the decision and some of the negotiation that we have to do with our customers and vendors to ensure that there is a little bit of more cash that is getting generated in the system. So that is what is important, is that I will be able to give you a trend that in every quarter now onward, you will see that there will be a positive cash build-up in the system.
Okay, got it. Thank you so much.
Thank you. Reminder to all the participants, to ask a question, you may please press star and one. The next question is from the line of Dipan Sankara Narayanan from Trustline. Please go ahead.
Good morning, everyone, and thanks a lot for the opportunity. So firstly, wanted to understand, are we planning to source more PAP from Indian suppliers? Are we foreseeing supply stability and the prices of PAP going down for us?
Yeah, we do buy. Our decision to buy depends on who is giving us the best price, who can give us a better supply security. Definitely, we want to distribute it between all the manufacturers, and subject to price, better share can be given to some of these people. We are already procuring from Indian manufacturers, and will continue to do so.
Okay. So are we satisfied with the quality of current PAP producers in India, or you think it will take some more time for them to ramp up the capacity with adequate quality?
Yeah, I can tell you very confidently, at least with one of the suppliers, we have worked closely together, help them improve the quality, and the quality is quite satisfactory right now.
Okay. Thanks a lot, and all this.
Thank you.
Thank you. The next question is from the line of Tushar Vora from MK Ventures. Please go ahead.
Yeah, thanks for the opportunity. Morning, everyone. And congratulations to the management for a good set of numbers. So firstly, I just want to understand, we mentioned strategic build-up of inventory earlier in the call. If you can help us understand whether it is for an existing product, whether it is for a potential new launch, and what kind of build-up have we seen over and above normal?
It's for all products, Tushar. For existing and also new launches, we need to pile up enough inventory before we launch the product. And all the supply chain disruptions have caused us this build-up. One is the sailing time from here to the US, which used to be 23 days, 24 days, has gone up to 45 days, 50 days. That itself doubles the quantity on water. And uncertainties of material arrival in port. And once the material arrives in the US port, the problem is getting it to the distribution warehouse. There's a shortage of containers even today in the US. Although international freights and the availability of containers have improved, within the US, there's a problem. And so just to overcome all this, we had to stock a lot of inventory for existing products and also new launches.
Got it, sir. Second, just an observation, our share of metformin in the overall revenue has trended down a bit recently. Is there anything to read from this trend, and how do we expect metformin to pick up going forward?
Metformin will continue to have the same sales, if not a little growth in US, but we definitely see growth coming through from other geographies. We are already at a very decent market share in the US. So I think rather than concentrating and pushing more into the US, we should concentrate on other geographies. We got an approval for UK, and we are likely to get our approvals for Europe also from metformin shortly. So we should be getting increased revenues from metformin.
I meant revenue share, the metformin revenue share for our overall revenues, meaning which is about 25%.
Overall revenue, overall products are also increasing, Prashant. Paracetamol is doing well, Ibu is doing fairly okay, and other products are coming up. So I think it should increase slightly, but okay, Prashant, I have the numbers here value-wise, which has increased a little bit by 20 crores. As a percentage, it's come down. That's what exactly I was saying. There's an increase in other products also. So as a percentage, it may stay there or increase a little bit. But we see a lot of potential for paracetamol tablet launches in Europe going forward. So maybe for the timing, it may stay there, but slowly there could be some improvement too.
Right, sir. If I may ask a couple of questions around the long-term strategy. One on the biotech side, if we can understand what is the product strategy or what, how we are intending to build up this space over the next, say, 2 to 3 years. And even on the longer term, what is the intended strategy regards this new asset? Also on the oncology side and regarding the new block, Vizag block, if you can help us understand any progress on the CDMO, CMO front for onco and hypo products.
Yeah, I think Dr. Ramana will take that question.
Yeah. So on the biotech side, the way we are looking at it is we already have a good portfolio of the existing commercial products and also the new products where there is a possibility of doing a biotransformation, which helps in 3 ways. The first one is to look at cost leadership. The second one is to look at ESG. We also stated that Granules focus on ESG as a strategic lever. I think it is always there, and we have already started working on it. So these will help us to move in that direction. And the third one we are looking at is the future product portfolio where when you develop the products, I think this will be the first approach that we will take on the product development side. So I think we are already good with the portfolio of the product that we want to do, and then how the enzymes and the biotech fermentation area that need to be built up as a capability. We have already started making our steps in that direction. We already got the R&D lab and the pilot scale fermentation done as a first step, and we will be going forward and looking at commercial production and utilization of this into our identified portfolio of the products, both from commercial as well as the future product development portfolio. Coming to the second question, I think we have already made good progress on the oncology CDMO side. We did have some contracts that have already been done, and some products will be getting commercial today. Already we have commercial with 1 or 2 products, but that will be the intended focus as we move forward, and would love to create that line of business in the next couple of quarters.
Thank you, sir. That's very helpful. Just if I may squeeze one last quickly, when you highlighted cost management initiatives to improve the overall margin profile and also the cash flows, if you can highlight specific initiatives you're taking, and on the business side, despite a higher sales from paracetamol this quarter, our margins have improved, gross margins have improved. It's fair to say that in paracetamol also we have bottomed out from a gross margin perspective.
Yeah, I think the specific initiatives that we are looking at, I think as a part of our overall strategy, and we have already started implementing it in some of the areas, we are looking at the product level cost leadership at a global level. So I think you see that directionally we are looking at that as a part of our overall EBITDA transformation journey we have kicked in. And you will see some of these initiatives which will be focused on the EBITDA transformation going forward. And that I think is already visible when we look at the EBITDA percentage improvement. And we hope to see that, along with the stabilized strike costs and the raw material costs that are likely to be either stable or go down as we see the indications, I think the journey that we have started on a technical side, on both R&D, manufacturing, to really bring up the areas of focus which will enable us to drive the EBITDA transformation journey. I think these initiatives are already in place, and we are also going to improve some of those initiatives going forward to enable us achieve the targets of the EBITDA which we have in our mind. That's the first one. And on the paracetamol, I think, can you just clarify your question exactly on paracetamol, please?
So, sir, it's just my understanding that paracetamol would probably be slightly lower margin product for us than the overall corporate margin. So when we see a quarter-on-quarter improvement in gross margin for the company this quarter, despite a higher paracetamol sale, is it fair to assume that the gross margins for paracetamol per se as a product have also bottomed out in the previous quarter? So we are trending upwards in gross margin in paracetamol as well, in addition to the overall business?
Last quarter apart, Tushar, as we sell more and more of tablets of paracetamol, the margins will improve positively. So like I said, we are launching paracetamol tablets in Europe, where there will be a lot of value add in terms of margin also. So it's not definitely bottomed out. There's still scope for improvement in margins for paracetamol.
Got it, sir. And just a clarification, my apologies, but when you mentioned cost management programs, you're referring not to operational but to actual product profile, meaning yield improvement or something on the R&D side that is improving your cost structure for specific products. Is that what we refer to in the cost management side?
That's right. I think we are looking at several aspects of the product cost, and I think that is the initiative that we have precisely taken up as a part of R&D. Sandeep, would you like to add?
Yeah. So, Tushar, apart from the initiative which is specific to a product, there are also overall initiatives that we are taking which was not there earlier. That is like various places wherever we are finding that there is an increasing trend in the cost than we anticipated. There are other areas we are identifying where there is a scope of improvement, and we are very, very judiciously working towards reducing making the cost structure same or less at an overall year basis. So which is a pure transformation from the way we used to look at the things earlier. So there are two ways approach. One is that product specific cost optimization approach, and then cost center specific cost optimization approach also. So these are the two things which will eventually improve the EBITDA.
Got it, sir. Thank you so much. That's very helpful. I'll join back in.
Thank you. The next question is from the line of Varun Patni from Quant Mutual Fund. Please go ahead.
Yeah. Hi, good morning. Just one question. So with the plant capex...
Excuse me. Can you speak up, please? Your voice is feeble.
Yes. Varun, can you speak a little louder? We are unable to hear you.
Yeah. Am I audible now?
Little more louder will be better.
Okay. So my question was with the planned capex of 300 crores and 250 crores of buyback. So what is the year-end net debt target that you are going to, sort of achieve with the strong cash flow generations as well?
We are sure that we're confident that the net debt position will come down. There will be a positive cash flow after all this expenditure. The net debt position will definitely come down. By how much is something I cannot venture to say, but definitely there will be a reduction.
So you are planning to cut down on the long-term portion of the borrowings?
Long-term portion is very little. It's only 300 crores.
So it will come down to 100 crores.
It will keep coming down year on year by itself. In 2 3 years, there will be no long-term debt. Even today, if you see, by the end of the year, our cash position and long-term debt will cancel themselves. What we'll have is only short-term debt. That also will possibly be there or come down a little bit.
Okay. What gives you sort of confidence to, have a better cash flow generation this year? Like what has changed fundamentally?
It's basically the inventory management which went haywire because of all the supply chain disruptions. That's going to slowly turn positive, number one. And also we see improvement in reduction in receivable days. So we are working on different customers to bring down the credit days, and we have already seen some positivity there, and we see more going forward.
Okay, great. Thank you.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for taking my question. Am I audible?
Yes, you are audible, Yogesh.
Yes, sir. So actually, I wanted to know some information on the regional revenue. So if I look at Europe, for example, it looks like that Europe has increased by about 60% on a YY basis because of the increase in paracetamol. So just wanted to understand what is the scenario over there, and is it sustainable, this growth going forward?
Improved revenue share in Europe from 16% to 22.5%. That's what you are saying, right? Whether it is sustainable or not.
Yes, sir. So on a YY basis, if I multiply those proportion, I get about 60% increase.
Yeah, you are right. So there will be more actually going forward in Europe, because as CMD was mentioning, and we have clearly mentioned that our next 2 years of focus market will be Europe, expansion in Latin and South Africa also. So whereby and that is the core product. So obviously there will be improvement in those geographies. And as we go back to the core versus non-core, so it will be like this, that the entire expansion will happen in terms of all the geographies, and then the percentage of the core will be gradually increasing to 19 to 22, 23. That we are actually mentioning. So that's how the strategy will work.
And sir, regarding there were some recent news that there has been drop in PAP prices. So is there a big chance of an upside in margins for paracetamol going forward because of decline in PAP prices?
There will be a short-term upside, Yogesh, but then again, when prices fall, the customers also expect us to pass on the benefits. Like in the past, when prices were going up, they would not give us a price increase immediately, but over a period of time, there was always a lag. We were getting some increases. So here also with a lag, there will be drop in prices, but overall margin we believe can actually improve a bit.
Yes, sir. And coming back to Europe, so the 60% growth, can we expect to a range of 50 to 60% for the next few quarters for Europe?
50 to 60% of the total market, total revenue, or growth?
Growth. 50 to 60% YY growth for the next few quarters for Europe.
We have to see. We are having new launches that are coming up. Very promising, but let's see how they perform. We'll be launching some products, possibly 1 or 2 products in this quarter itself, but otherwise definitely next quarter. So definitely there's going to be growth. How much, I won't be able to say today.
And sir, in terms of your US, how many launches are we planning for FY23 in US?
Priyanka, would you like to take this?
Sure. Good morning. We have about 2 to 3 launches that are still pending for the rest of the year. We'll be launching them in this year, but we'll see the effect of the market share pick up only in the next year. We'll see some in Q4 and remaining in the next fiscal year.
Yes, and in terms of US, I understand that we have grown our revenues by 18%, on a YY basis. So if I am just assuming that if there's a price erosion of 10% in the US market, volumes would have increased by about 28%. Am I correct on those things?
Volumes have certainly increased. Percentage-wise, I need to get back to you on that, but volumes have certainly increased, especially on our larger volume products.
Sure. And on India business, it looks like there was a degrowth in India if I just multiply the contribution. So if you can share some light on the India business. for the quarter compared to same period last year?
Our objective was always to add value to our products, Yogesh, and India we only sell APIs. So as we add value and the PFIs and tablets are sold in other markets. So for a period of time, unless we have new capacities of certain products coming in at surplus capacities, India business will be here or possibly there will be a little more degrowth. Definitely it's not going to grow. Even if it grows in the short term, it will slowly come back. Unless India also becomes a big market for PFIs in future.
Sure, sir. And lastly, on the LATAM market. So LATAM, it looks like we increased by about 1% on a YY basis. But since you told that our focus would be on LATAM, so I assume that that will grow exponentially in the coming quarters, the LATAM market?
Not in the coming quarters, Yogesh, but in coming years definitely. Because we have been, the focus now is from PFIs to FD in LATAM. So that's going to take some time. We have made some filings. We'll be filing some more. So over the years, definitely there's going to be growth. Definitely not in the next few quarters.
But can we expect a lower single-digit growth in LATAM for this year?
Yes, it's possible. Not possible. Maybe 1% or so possible, but let's say it's going to be stable.
Thank you, sir, for answering the questions. Thank you very much. That's all from me.
Thank you. Ladies and gentlemen, in the interest of time, this was the last question for today. I now hand the conference over to the CMD for the closing comments. Over to you, sir.
So, ladies and gentlemen, while I thank you all for participating in this call, let me conclude by saying we have ended this quarter on a very positive note, and we are also positive that quarter on quarter we'll see some improvements both in terms of profitability and also in terms of cash generation. And we are also confident that we'll end the year on a very positive note in terms of cash. So with this, ladies and gentlemen, I thank you once again for attending this call.
Thank you, members of the management. Ladies and gentlemen, on behalf of Granules India Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.